So here now to discuss this is Lori Calvasina, the head of U.S. equity strategy at RBC Capital Markets, here in person in New Jersey. It's great to have you here, Lori.
Thanks for having me.
So I know this because we've spoken about this, and just about 5 minutes ago, you've had some sleepless nights because of the earnings reports that you are poring over. What have you gleaned so far? It's still early.
Yeah, it's still early, but, we tend to read a lot of transcripts on my team. Clients are busy, and so we want to hear what they're hearing. And to be honest, coming into this reporting season, I'd spent a lot of time looking at the off-calendar reporters, and what we knew was that this whole concept that, tariffs aren't going to have an impact just wasn't true. I mean, we had seen some of these smaller companies, sort of really struggle with some of the issues. And so we were really trying to just sort of prepare for investors for the idea that if you think this is all behind us, we haven't really gotten into it yet.
When do you think we will get into it? We've heard some estimates that it's not this quarter, but it could be next quarter, certainly kind of towards the holiday shopping season, and then by the first quarter of next year.
It's funny, our economists put out a report on sort of navigating the tariff framework, and one of the things they pointed out was that different sectors are going to see impacts at different points in time. I would say generally as a house, RBC macro, whether it's me, my economist, my rate strategist, we've all been anticipating the impacts to really be felt more in the fall than the summer. And if you go back to 2018, the thing that I remember about that first trade war is that we had a lot of optimism in the summer, especially in small cap stocks. We saw them really bid up, positioning went through the roof, and then we got into the fall kind of post-Labor Day conference season, and companies said, this isn't going to be all sunshine and roses, and we're going to have some impacts here. So even if you take that template from 2018, it took a few months for the impacts to really be seen and felt and digested, and for companies really to be ready to talk about them.
Have you seen anything so far? We haven't had that many companies, but 20% of the S&P will report their results throughout the course of this week. What exactly are the initial tea leaves that you might be seeing that you will look for validation for in the next 1 to 2 weeks?
So I would say when I look at the financials, and I think, we got an earful from them last week, and I would say everything, in terms of their ability to execute, I came out of the week still feeling really good about that sector. It's a sector we like. But the tone was somewhat guarded. And what I really took away from that was if you go back and look at things like the Duke CFO survey, some of these other C-suite surveys, they haven't inflected positively the same way, say, NFIB has, or the consumer sentiment surveys. And so it did seem like there was just a touch of caution among the corporates that wasn't being reflected in stock prices. So we're really going to be trying to keep an eye on that corporate tone going forward. I would say the other thing, and we saw a company last week in the industrial sector talk about this, that their customers had all handled tariffs very differently in the second quarter. And so in some cases, they just kind of marched through. They soldiered on. In other cases, they paused activity or demand. And in other cases, they pulled forward demand. And I think this is going to be a very messy quarter, company by company. But really trying to understand those dynamics in different industries. Did we pull forward some of the earnings from 3Q into 2Q? That's something we're looking for. And then the last big question is inventories. We know that a lot of inventory has been pulled forward and used as a buffer, and that's why you're not seeing the impacts in inflation in a big way yet. But those are going to run out. Again, we think different companies in different industries probably have different levels of inventory, but we really need clarity from companies on when that runs out.
Yeah, and that leaves you on these markets. I mean, when you see the open doors, and the Kohl's surging and all of that, I mean,
yeah.
What does that tell you?
Well, look, I think that if you think about sort of the meme stock phenomenon, right, if I kind of go back historically, it feels like whenever that's dominating the headlines, it feels like we're kind of hovering around the peak of something.
Totally.
And I've been watching, sort of the EPFR data on institutional flows and retail flows, and we absolutely saw sort of on the retail passive side, money coming into the market in May, and then in June, you started to see the institutions chase, but that's slowing down. So it feels to me like underneath the surface, if you look at things like the momentum trade, you're starting to see that ease back a bit. It's something our traders have been talking about since July 4th.
Really?
Yeah.
You're seeing it ease back over the past couple of weeks.
Yeah, and if you look at I'm not a big factor person, but if
Yeah.
you look at different kind of third-party gauges of factors, what you're seeing is that it's kind of softening out if you just look at like these pure momentum strategies. And we actually did a little study. It's fascinating. If you go back to the beginning of 2014 and just look at daily pricing between some of these factors of momentum trade and S&P, it's like an 85% correlation. But guess what? You tend to get a little bit of a lead that when that momentum factor softens and peaks out, that, anywhere from a few days to a few weeks, the S&P makes a top.